I think let's kick off with East African Portland Cement and news that Capital Markets Authority has suspended trade on that stock. It's not the first time we've seen board wranglings result in stocks being suspended. We still have CMC Holdings shares suspended. But what's going on at East African Portland?
Thank you for having me on the show. On East African Portland, I think it's an issue of corporate governance. Different stakeholders are purporting to wield power and influence as regards the company. This 60-day suspension follows a 30-day suspension that had been effected in December by the capital markets, citing concerns regarding the end consumer with a free float of about 6%. But I think the key issue for this company is, on one side, you have the government, which is represented by the Minister of Industrialization, firing the CEO and suspending the CEO and the board, citing concerns in terms of procurement irregularities. And then on the other end, you have the High Court ruling against this decision, citing the fact that EAPC is not a parastatal, but is in effect a privately held company. The essence of the ownership comes on the fact that NSSF, which owns about 24%, and the government of Kenya, which owns 23%, are both considered to be separate entities, and they cannot combine their ownership to reference the terms of operations as regards East African Portland Cement.
CIC Insurance Group has said that it's wanting to list on the bourse by way of introduction as opposed to through an IPO. Is this a wise move given the bear run that we've seen on the NSE?
I think looking at CIC, you look at it twofold. First, you look at it from its operational setup. I think this company must have made a profit in the last financial year, and this comes from the inference from the reported numbers that came from Cooperative Bank. And it's important to note that Cooperative Bank owns 25% of this company. From the last published announcements as of 30th of the end of September, this CIC had actually made about 102 million profits, which were reverted to Cooperative Bank. And if you infer from this, you can conclude that they made about 400 million in terms of profits. So I think their profitability is okay. And I think what they're trying to control is the perception that Mbithe, which is a listed company, has actually issued a profit warning based on its operations on the Nairobi Stock Exchange, and it thinks its profits will be down 25%. I think this will not be a read across for CIC, but the fact that there's perception in the market that could actually deter management from putting through an IPO. And secondly, CIC, I think, is introducing its shares by way of listing just to give its current shareholders a market to trade and also be able to determine the price that the market would be willing to pay for in case they decide to come again through an IPO.
Just looking at the insurance sector as a whole right now, as you mentioned that profit warning from Mbithe, that stock has been under pressure as a result of that. But which of the insurers do you see having the strongest balance sheet and being able to cushion themselves against this falling equity market?
I think it's not really a case of who has the strongest balance sheet, but it's a case of who's able to return the greatest returns to its shareholders. And if you look at insurance companies, their operations in terms of profitability are twofold. There's the core business, which is underwriting insurance. And I think most of them actually made good revenues from that, based on the fact that last year revenues across the sector actually improved, just on the fact that more insurance products are available in the market, and there was much more volume and appreciation of the insurance products by the electorate. And secondly, you need to understand that once they make this underwriting revenues, they actually invest them either on quoted exchange or unquoted equities or in real estate. And probably the ones that actually had a detrimental effect on their bottom line would be the companies that had a huge impact on the Nairobi Stock Exchange. Case in point, Mbithe, which has a huge holding in Equity Bank, which at the beginning of the year was trading north of 20 shillings, but now it's actually at 50 shillings towards the close of the year last year.
As you say, they're twofold, to the insurance business, really, from the perhaps a realignment in terms of asset investments going forward for many of the insurance, but from a fundamental perspective, looking at the insurance part of the underwriting business, with insurance penetration still so low, which stocks do you see as having the strongest presence right now and the best growth prospects going forward?
I don't think I want to be short commenting on insurance companies, so I'll probably hold my comments on that one and just wait to see what happens when they release their annual numbers towards February and March.
I'll come back to you with a comment on that when that takes place. Right. Then. Moving on to the inflation, the picture as we see it right now. We've had fuel prices, of course, being revised downwards. Electricity prices are set to come down in February. Electricity and fuel make up around 20% of the overall CPI basket. How are these downward revisions, in your view, going to impact the inflation outlook going forward?
I think inflation for Kenya is going to correct downwards, which is a huge positive for the country. But I think instead of just looking at Kenya alone, it's important just to put it into perspective and look at the East African countries. This week and end of last week, Tanzania and Uganda revised up their electricity tariffs. They stopped subsidizing or actually cut back the subsidies that were given to the population in these countries. What this means is that as the Kenyan inflation comes off, then we expect inflation in Tanzania and inflation in Uganda to pick up. But notwithstanding, I think in as much as Kenya will be improving in terms of its inflation figures, Rwanda still stands out as the most compelling macroeconomic environment in this side of East Africa. And apart from Kenya, then Rwanda would actually be a better bet in terms of inflation.
So if you were wanting to put some money into the Rwanda Stock Exchange, any stocks that you see as offering the best value right now?
I think what we've seen is Bank of Kigali has come under a lot of pressure, and it's actually trading at below its IPO listing price. We think there'll be a bit of foreign interest on that stock, more on the institutional side of things, because what we are seeing is a lot of retail selling. Essentially, most of the retailers are selling to fund short-term expenses, school fees, and day-to-day expenses. And I think now that it's actually well below this price, and we actually initiated on it at 136, it offers a bit more upside at the current levels.
Quickly coming back to Kenya and the currency outlook, you mentioned that the outlook for inflation is a bit of a concern going forward. The shilling down 1.5% against the greenback so far this year. It has been under pressure as a result of imported dollar demand. What are your forecasts right now in terms of trading ranges?
I think what's of interest just on the currency is where it actually is. It's trading between 86 and 85 range. We've seen a lot of activity by the central bank in terms of reverse repos just coming into the market and trying to stabilize the currency at the current rate. I think for us as a house, we think there's a bit more of weakening that we should expect from where it is, closer to 92 shillings to the dollar, as opposed to stabilizing at where it is. And I think the central bank operations, the interim operations, will actually stabilize it in the short term, but then market perception and market activity will actually push it down to about 92 shillings to the dollar.